This is Shubham from Monist View, and today I welcome all of you on a podcast. This episode 1 regarding the best gold investment options available in India. Let's have a background about this podcast. Over here, we are discussing the different options available for gold investment in India. Here we include physical gold, digital gold, gold mutual fund, gold ETF, and sovereign gold bonds, which are known as SGB. So what is the reason behind this discussion? Gold is a natural hedge, and it has a history which it has proven that it provides a handsome return in case of a black swan event or where the share market or business are overvalued, and it is known as a God's own money because it has an intrinsic value. Intrinsic value basically measures of what an asset is worth, and that's why gold is a natural hedge product available. So what are the options available with us in India? Let's discuss one by one. We have normally 5 options are available. First one is a physical gold. This is a traditional way of buying gold from local shop in terms of a gold ornaments, jewelry, bullions, gold coin or bars. Mostly used as a personal consumption and less for investment view, but for part of a safety investment option. And as far as world versus India is concerned, India's household sit on the world's biggest private stock of gold at 25,000 tons, which is worth around rupees 110 lakh crores. Yes, you heard it right, 110 lakh crores. Now second option available with us is a digital gold. This is a new and innovative way to buy the gold in digital form, mostly in payment wallets like Paytm, PhonePe, Kuvera, etc. And these are all options available because of a private player. In India, if you go and buy from gold in form of digital gold from any of these private players from different wallets available with us, it has a GST rate of a 3%. So it's an upfront rate which you pay along with your gold. Third option is gold ETF. This is passive way of investing in gold through stock market. It is good for long term provided tracking error is less. So what is a tracking error? Tracking error is basically the error which the ETF actually makes if as compared to the underlying product available. So in gold ETF, the underlying product is the gold which is available in international market. If there is any deviation or changes from gold ETF price, that is a tracking error. But normally tracking error is very less because over here there is only one asset to track, that is gold. In India, gold ETF are in initial stages. We have only 9 gold ETF listed in a stock market as compared to 40 plus in US and 30 plus in China. The next option available is gold mutual fund. It is similar to gold ETF, but over here these schemes are directly managed by the mutual fund houses. So over here the upfront we have to pay is a management fees, and management fees are management fees are high as 5% in some mutual fund, which is less in compared to the active fund, but generally if you consider gold as an investment, it is really high. The last option available with us is SGB, Sovereign Gold Bond. It is a debt instrument issued by central government paying interest at a rate of a 2.5%. This is a current rate which the central government offers. It has vary from 2% to 4% based on the past performance available and the issuance by the government. It is backed by the actual gold reserve by the central government. The period of holding is 8 years, but if you want to sell and want to get a tax benefit, you can sell after 5 years. Now let's discuss what are the important criteria or what are the main objective for which you have to go for these options, and selection will be easy process. The first one is SIP, systematic investment plan. In this class of asset, is there any SIP option available? So for the people, SIP is a very basic strategy of a pyramiding in any class of asset or shares or any other thing for long term perspective. So SIP option here is available in gold ETF, mutual fund and digital gold only. Second important point is liquidity. Is these class of assets provide liquidity? So in case of a physical gold, liquidity is there, definitely there, but you have to always engage with the local vendor. Except for a physical gold, in all cases liquidity is very high. third important criteria is a minimum investment. It's deal with, is there any minimum investment requirement? In physical gold you have to bargain with a local vendor. For digital gold sometimes it's based on the wallet or the platform like grow or other platform, but is generally a 0.1 gram. In case of a SGB sovereign gold bond you have to take 1 gram. This is the minimum requirement, but for mutual fund or ETF it is based on the scheme offered by the mutual fund houses. Normally minimum investment is rupees 100 or rupees 500. Let's discuss the fourth point, delivery of a gold. Is there a delivery of a gold happens? So basically not all forms of a investment are either a digital or a contractual. Only in case of a physical gold we have to take a delivery, and it is a consumption based. Fifth point is a tax benefit. Is there a tax benefit available? Yes, but there are certain cooling period, or which we can call as a holding period. In terms of a gold ETF it's a 3 years, mutual fund 3 years, sovereign gold bond 5 years. Sixth important criteria is additional tax rate. These additional tax rates are generally based on the services provided or any opportunity cost available with that. In case of a physical gold, additional taxes are 3% to 5%. It is vary from local vendor to vendor, or any specification or modification are done because these class involve physical delivery of a gold. In case of a digital gold, tax rate is a 3%. For mutual fund there will be entry and exit, same in case of a gold ETF. But in case of a sovereign gold bond there is no such additional tax rates available. Seventh point is a discount. Yes, you heard it right, discount. Only in case of a SGB sovereign gold bond central government provide discount of a rupees 50 per gram. The objective over here is a retail participation. The government of India wants retail participants in SGB. So it's a unique product available in a market offered by central government backed by physical gold where you get a discount. What you want more? Eighth option is a vendor or a source. So this deal with basically from where we can get this asset. For physical gold it is available from local vendor. For digital or mutual fund or ETF, all payment gateway apps like Grow, Paytm, etc. these offer their services from their platform. For sovereign gold bond you have to access through a major broking house like a Zerodha and Upstock. So what is a bottom line? Gold investment is basically a very good proven long-term class of asset which provides a natural hedge in black swan event, and it is important to have an investment some percentage of your portfolio in gold. And as far as different options are available, sovereign gold bond is the best option available in terms of a cost, tax benefit, safety, and more importantly it is backed by the physical gold issued by central government. So thank you for joining us in this podcast. If you have to read the whole article and research about this, we have shared a link in the description. Thank you for listening and watching.